Last week's weekly preview conveniently posed the question as to whether US inflation will rally the markets, and the Nasdaq 100 certainly listened as it posted a third consecutive week of gains. The same can't be said about the Dow Jones and the S&P 500 though, who really both struggled for any momentum whatsoever. It was an action-packed week in the UK markets as well, with actually quite a surprisingly hawkish outlook from the Bank of England, which not only hiked 25 basis points, but also upgraded its growth forecasts. As week 20 approaches, is it prime now for cable to break out to the top side? Is it overextended? Will crude oil finally gather some momentum? Let's try and answer all of those questions right now. Hello, I'm Connor Woods, one of the trading coaches at ForexSignals and howtotrade.com. Here is our weekly preview for the 15th to the 19th of May 2023. Now then, Federal Reserve Chairman Jerome Powell always generates attention from traders all over the world, and rightly so, with his decisions really driving volatility in the markets. This week is headlined by Powell participating in a panel discussion at the Monetary Policy Research Conference in Washington, D.C. on Friday. And on top of this, other central bank members are speaking throughout the week following their respective banks' policy decisions. US retail sales are likely to be the driver of most volatility in early week trading, and there could be a volatile Asia-Pacific session on the way when Australia releases its employment report early Thursday morning. There will be plenty of opportunities this week, as always, and let's check them out right now. Okay, then, so Monday's session always feels like a little bit of a feeler session in the sense that traders tend to sit on the sidelines a little bit more, plan their trades for the more volatile days throughout the week. And the event likely to drive the most of the volatility on Monday will be coming up 30 minutes before the US opening bell in the form of the Empire State Manufacturing Index. And after a worrying start to the year, the US manufacturing sector data has improved somewhat, but there's still a long way to go to claim any sort of meaningful rally. I think the question here on everyone's lips is how much higher can the Nasdaq actually go, right? Clearly, those FANG companies really keeping, Apple, Google, etc., really keeping this stock market afloat. Lots of bids into technology. This is completely different to how, for example, the Dow Jones and the S&P 500 looks. It's definitely the stronger of the three, but I'm still seeing some technical weakness. I really am. Obviously, we've now got such a key high coming into play up here, right? Potentially, that's the ball target for the week. Wouldn't surprise me if we see highs get flushed out here. But the thing that I'm really focusing on is a sign of a break of structure to the downside. And the reason I'm thinking that is because it's quite clear to me that what we see. Look at this run up higher in the Nasdaq itself. On the prices, you can see that run up higher. Squeeze into the top side, but at the same time, those RSIs still showing lower. That's bearish divergence, and for me, is potentially a sign that this market is losing some momentum here. And this is daily divergence, so it's got that extra bit of confidence in that as well. Difficult at the moment because we're sort of trying to catch a top, but looking for any sign of weakness to the downside, and I think maybe we may see a couple of days of downside, and I think we can at least come and target the 13,000 level off the back of this daily bearish divergence. Obviously, the bulls will have this target in mind at 13,700. Now then, can Tuesday be the day that cable has a meaningful breakout to the top side? Well, there is an inverted head and shoulders created on the daily chart. There is a chance. The UK also releases its claimant count change in the morning, followed by the US releasing retail sales figures for the month as well. And this puts cable directly in the spotlight for next week and for Tuesday's session as well. This is what I see on a daily chart. Inverted head and shoulders, typically we see that at the end of a downtrend. Not only that, we've got this key moving average crossover, that 50 crossing over the 100 and the 200 day moving average. It's come back and it's crossed over again. So we've still got that in play. Moving average is just starting to tick to the top side. Technically, this potentially could be a nice play because when we look at the neckline of this head and shoulders as well, and it does get a little bit messy over here because not too much happened, but a general grind to the top side. there's our break higher above that neckline. There's our retest of a support zone. That's our 4-hour demand zone that we can zoom in there. And for me, GU potentially has legs to at least come and fill some of this imbalance next week. Do we get a longer term run up to 1.3? Well, we saw Andrew Bailey really dismiss any recession talks. People seem to be bearish on the dollar. It makes sense, but we need to see this. We need to see this break really above 1.268 to be sure of that. Attention may turn to crude oil on Wednesday when the inventory figures are released. Crude oil prices, have slumped recently. It's been due to an economic downturn, potential economic downturn, dampening oil demand prospects for the remainder of the year. And this was not helped at all by last week's crude oil inventories, which showed a surprising 3 million barrel surplus when it was forecasted for a 2.2 million barrel deficit. Can crude oil really rally here? Well, from a technical standpoint, let's just get this on the chart now. There are signs potentially that we could see a rally in crude oil, and I see that from really, look at these. This is a daily swing low that was printed back in March of this year at 64. You can see when we had that real sell-off last week, flushed out these lows and then snapped a little bit higher. But for me, that market structure in terms of the bearish structure now, when we look at that, it's still intact, right? So there's not much evidence to really suggest that we are going to get much of a break higher. There was this little fake out here that was due to Saudi Arabia cutting production, but it's just been reversed ever since, right? So for me, we're now sitting at the time of recording sort of in the middle of this range between where we had that liquidity grab and where the key high is for me. If we can get crude oil breaking above 77, not only will it be a break above, the 50 and the 100-day moving average, we'll see those RSIs tick higher. That will be bullish signs for me for crude oil, and I think we could then go to the mid-85s. If we just follow market structure, this potentially is our new lower high that's been formed, and then the bears out there will really be, gunning for the 63 lows, which would be, quite a story for crude oil. We should be looking for a volatile Asia-Pacific session on Thursday as the Australian Bureau of Statistics releases a really critical employment report for the economy. Expect employment change figures and the unemployment rate to generate volatility in the Australian dollar, which has been performing fairly well since the Reserve Bank of Australia's surprise interest rate hike. Should we therefore expect the data to represent a tighter labour market, or is this move now, is it done? This is really where the move come from. Looking at AED yen, and the reason I'm looking at AED yen is because for me it's bearish signs. There's the attempt to go higher off the back of that surprise interest rate hike above that 200 AMA, and that would have shown, AED yen to really break out to the top side, but the price action really spoke for us here when we failed to get that retest. Do we get a retest this week? Potentially. But for me, when we look at the market structure now, there's our flush out of the 200-day SMA. There's our potential from the swing perspective, lower high coming in, potential trend line coming in as well. For me, I'm looking at a real critical low in AED yen being down here. If we get a break of 87.8, this opens up the door for sort of fresh lows and a fresh move to the downside, or we could get a bounce maybe from this 50-day moving average, and maybe we just ping pong in between that 89.5 and 91.5 level for this week. But critical levels coming up, but the initial signs for me are showing potentially that the bears aren't done yet. Now, Friday is all about central bank talk. FOMC member Williams speaks early in the afternoon to tee up really the crucial ones. Talks from Federal Reserve Chairman Jerome Powell and the European Central Bank President Christine Lagarde. After last week's slightly softer, I'd say more in-line inflation report, the market seems convinced that the Federal Reserve cuts by the end of the year. Not the view of the likes of Barclays or Goldman Sachs or even myself. A relaxed, confident Jay Powell may tighten the grip on these expectations even more, and the dollar could struggle this week. But from a technical standpoint, it's really sitting in limbo. It's really being stretched, and something is going to break soon, either to the top side or to the downside. As it stands right now, it's threatening a breakout to the top side, and let me explain why. First of all, bearish pattern, head and shoulders. We need to see a break lower down below at 98.2 to really be sure of bearish action for dollar for the medium term.
But we can see this real tight consolidation period. I've been very vocal about it. There's this descending triangle coming in as well. Do we get a breakout this week above 102.5? I think if we do, that opens up the door for the dollar balls, the 2022 themes to come back in. Of course, there could be a situation where we wick above it. Everyone thinks we're bullish on the dollar around here, and then it reverses, slumps, breaks down below the descending triangle and heads down lower. So we have to be really sure of this breakout. We need to see a solid daily candle close above. But something's about to happen on this DXY chart, and we should be prepared for either side.
Another busy week in the markets ahead. Perhaps not as action-packed as we are used to, but this is a great time to let your technical analysis do the talking. The week won't be without volatile drivers though, and US retail sales, as well as a crucial Australian employment report, will keep the fundamentalists on their toes. Either way though, our team of coaches will help guide you through these opportunities every single day in the trading room, ensuring high quality service as we cover all of the events for you in our live streams. On top of this as well, we are also proudly producing streams covering the specific lessons in our new academy. So, if you want to learn how to trade or know more about the markets, our academy is the perfect place for you, and you can access that by visiting our website, www.howtotrade.com. Until then, trade well, and we'll see you on our next live stream.